Okay, if you're holding crypto, you have 134 days. So we'll talk about the relevance of the 134 days today. But if you are holding crypto, I think you want to hold it because it means you only have 134 days. I also want to talk today about Bitcoin, and Bitcoin's about to have, actually, if you look at this, Bitcoin's about to have its highest monthly close ever, and actually its highest quarterly close ever. So if you look at the 1 month charts and you look at where we are now at the highest monthly close ever for Bitcoin, and also at the highest monthly quarter. I want to review the quarter because at face value, the quarter actually looks really good. Highest or best quarter we've had for Bitcoin in the last 6 years, and highest or best quarter we've had for ETH in the last 6 years. I want to talk about what that means for the next quarter and whether that is good news or bad news for the next quarter. And then when we talk about altcoins, pretty much nothing happening, but as you can see, there's one like very big bubble, two big bubbles, but one specifically very big bubble, and that's Arbitrum. And I want to talk about why Arbitrum's actually running, because Arbitrum's running because Robinhood is rumored to be building an L2 on Arbitrum. So just like Coinbase built Base on Optimism, Robinhood is rumored to build an L2 using Arbitrum or on Arbitrum. And what that's doing is it's highlighting just how important it is for you guys to have stocks, crypto stocks in your crypto portfolio. So one thing I want to do today is actually want to look at what crypto stocks you need to have in your portfolio to make sure that you're getting the full exposure to the crypto markets, and why it's so important to get that full exposure to the crypto markets. Because I think unlike previous cycles where we would make our crypto money in crypto, actually, there's more money to be made now by holding stocks that get exposure to crypto. And I'm going to show you exactly why that is. And I think we all have to break out of that paradigm that we're only in this for crypto, because as I've said to you guys before, crypto stocks have actually brought you better returns than crypto tokens. I mean, again, I'm going to show you this before we start the show, but you can see here, if you take the bottom to the top of Coinbase, that's 150%. Now, I don't know any like major crypto token that did 150%. If we go to Robinhood, which is, you could say a crypto, you could say that from the bottom to the top, it's done 184%. That's better recoveries and better exposure than any type of crypto token. And no token's done what Circle's done in the last couple of days. So let's talk about how to actually get exposure to crypto stocks in your portfolio. The good news is you don't actually have to leave your crypto rails. You can actually use your crypto money. So if that sounds good to you, you know what to do. I don't even have to tell you anymore. Just subscribe to the channel. Okay, we had Josh and I had a really crazy bet today playing table tennis. You know, we've got table tennis outside here. And Josh and I, we decided to take a bet. Josh, what was the stakes of the bet? A tooth. So the loser had to basically lose a tooth. And the bad news is that I lost the first game. But the good news is that I won the second game. That whole game is going to be on my Instagram later if you follow me on Crypto Man. But the stakes are getting really high here. We're now betting teeth. Can you believe it? Josh, how many teeth have you got left, bro? You need to make sure you got enough teeth to pay back your bets. Can you imagine one day I rock up on the street, no front tooth? What happened? I lost to Josh in table tennis. It's crazy. But I mean, listen, we're all going to have fun because the market's not giving us any fun. Actually, it is giving us fun, but you need to know where to look, and that's what we'll talk about today. Anyway, listen, I hope you guys had a good weekend. I do see all the regulars here in the chat. Someone says, nice sweater. Thank you. My granny knitted it for me. No, I'm joking. It's from Cooples. So, huge alpha. Let's just quickly talk about yesterday. So I know a lot of you yesterday wanted to get into Bukele bot, and the link that we had in the show was actually the wrong link, and so people couldn't get into Bukele bot. So for those of you who didn't watch yesterday's show, Bukele bot is a specific bot that we have created, and this bot is like Nayib Bukele. What he does is he just accumulates Bitcoin. That's all he does. He accumulates Bitcoin very slowly and steadily. He accumulates Bitcoin. You can go and see all his trades. There's a link below, actually. Let me actually take you to the link below. There's a link below. In order to get to Bukele bot, I managed to get the number of spaces increased to 500 spaces, right? Instead of yesterday, it was 200 spaces. In order to get into this bot, you have to sign up with this link over here. I'm going to try and get that changed, but for now, that's the only way we can do it. And then you deposit money and you follow the Bukele bot. Now, what I mean by follow the Bukele bot, you effectively, this is a bot that's trading with the ultimate strategy of just accumulating Bitcoin. You can see all its trades. You can see it trading in and out over, let's just see if we can get statistical data quickly. I don't know why it's not refreshing. Current position. Let's go to trade history. Why is it telling me that there's no data here? Let's refresh. Okay, we're quickly just going to refresh for you guys. Let's just refresh. And then I'll show you guys how it actually works. So you click on Bukele bot when you've deposited money into your Blowfin account. And you can click on here and you can see the trades. You can see it's in a trade now. It's 1% down in that trade now, but you can see the trade history. Every single one of the most recent trades have actually been profitable. The good thing about this bot is that its win rate is about 74%. So I think it's going to be a very, very, very profitable bot. Unfortunately, Blowfin have set like this restriction that they wanted 200 people. We said, no, you got to increase it to 500 people to actually, okay, I see 43 of you have already jumped. Okay, calm down. You don't all have to jump in. Just a note before we actually get into alpha. If you're going to do the bot, then don't put all your money into the bot. It's not a bot that you're supposed to put all your money in. You're supposed to diversify and make this part of your portfolio. We are expecting this bot to do pretty good returns. We are expecting it to do over 10% a month, but let's see what actually happens. We'll keep it actually going. All right, we'll talk about that more at the end of the show. Let's talk about, this is just because yesterday we had to remove the show because the link didn't actually work. So people were texting me and saying, look, we want to sign up for Bukele, but the link doesn't work. Now the link actually works. All right, let's talk about Bitcoin. And remember, I'm going to bring you alpha. You guys just need to smash the like button. That's it. So here we are in Bitcoin. Actually very interesting. What you can see is that Bitcoin is trying to break out of this 108,000 thing. Yesterday, it actually went as high as like 109,000 on some exchanges, right? You can see that the momentum is slightly up. And you can see that what Bitcoin is actually doing is it's banging on this trend line, and it's banging on this trend line, and it's banging on this trend line. You know what happens after it bangs and bangs and bangs. Eventually, at some point, it's going to break through. It was rejected here, but this is an accumulation pattern, and it is eventually going to break through it. And I think it's going to break through in July, and I'll show you why I think it's going to break through in July. In the meantime, biggest monthly close, biggest quarterly close that we've ever seen for Bitcoin if we stay where we are now. And I think we'll stay where we are now because there's not really much that's happening. So that's happening right now. I want to talk a little bit about the quarter, right? At face value, actually not a bad quarter. Like Bitcoin, 30% up on the quarter. ETH, 35% up on the quarter if we close where we are now. Obviously, remember, there are a couple of hours left until the monthly close. Interestingly enough, it's the biggest month that we've had for Bitcoin since biggest quarter that we've had for Bitcoin since 2020, and for ETH since 2020 also. But that only tells you half of the story. And the reason why I said only tells you half the story is because what you can see is that here all this was basically just a recovery. And so like we went down 45% in Q1, but we only recovered 35% in Q2. So there's really nothing to be excited about. It was just because we had such a terrible a Q1 that Q2 was actually good, which wasn't actually very different from 2020. 2020, we also had a terrible Q1, and then we had a very, very, very strong Q2 specifically around Bitcoin. So when people talk about the best Q2 in 4 years and whatever else, try not to believe all the hype, because it's all about a recovery. I mean, a Hyperliquid had a very, very, very good recovery. That one I think is very, very good. But I think the main thing here is, despite everything, despite BlackRock being here, despite BlackRock supporting ETH, despite everything, we still haven't had any kind of momentum from the altcoins. And I kind of think to myself that if we compare the cycle to the 2021 cycle, I just want to show you like where it is. If we compare the cycle to 2021 cycle, then actually in 134 days, that would be the end of the bull market. So if we take the Bitcoin chart from where we were today in 2021, and I think probably the best thing is to actually call it up here and get it onto the daily. So you can actually go back to 2021. Let's see if we can actually just quickly go back to 2021. Actually have a look at it. Probably better to go back on the weekly, but what the hell. So what you can see is by July, where we are now, by 11th of July, we already had a very vicious altcoin run. And we were bottomed we were bottoming on the Bitcoin cycle to go up for the last part of the cycle, which actually, if you take the top, ended on the 8th of November. Now, the 8th of November is 134 days away. That's like pretty much where I don't know if it's the equivalent, if you look at the 4-year cycle, is 134 days away. So that means that if we are to track the 4-year cycle, then we don't really have much time to start making moves in the altcoins. So there's two theories here. Either we can throw away this 4-year cycle theory, we can just throw it away, or we're going to have a very, very, very aggressive move. I must say, I'm much more leaning towards throwing away the 4-year cycle, but I don't know if I'm 100% ready to give up the whole 4-year cycle just yet. Either way, I do think that we're going to have a very, very, very strong July and August. July, August, September. If we take this quarter, I think it's going to be a very strong quarter. And the reason why I say it's going to be a very strong quarter is because you can now see that the stock markets are in price discovery. The Nasdaq, the QQQ, which is the Nasdaq, and the SPX, very, very, very. They're both in price discovery at the moment, which is very, very strong. Also, if you just think about where we're at, the China tariffs are pretty much gone, and allegedly there's a trade deal with China. Trump leaked the fact that they'd done a trade deal with China. We think that the trade deal with China is the US has got a 30% tariff, and China's got a 10% tariff on US goods. We think that that's what's going on. It isn't officially announced yet, but I think Trump and Besant actually leaked it, if you want to call it that. Then you've also got seasonality in the Nasdaq. So in the Nasdaq, if you look at July, since 2009, July is generally always a strong month. I mean, just look at in the last 16 years, July is actually the strongest month in the stock market calendar, believe it or not. Why do they say sell in May and go away, but then in July it's the strongest month in the calendar? Doesn't make sense. But I mean, anyway, that's what the stats are telling us over here, right? You can see that July is usually the strongest month for stock markets, and we're going in there when stock markets are in a period of price discovery, right? You know, like once I had a discussion, it was years and years and years ago with a crypto trader, and he was a much more experienced trader than me. But I'd come into this market, and I thought to myself, I know everything, and logic is going to get me through this. And my logic said to me, never, ever, ever buy a crypto. Bitcoin was at 5,800. And I said to myself, I cannot buy Bitcoin at 5,800 because it had just broken 5,800, which was like a very key resistance level back at the time. And when it broke 5,800, one of the experienced traders actually took me on Twitter, and I said, I can't buy something that's actually broken an all-time high. And he said to me, you don't understand how this game works. And obviously, because my nature is who I am, I was arguing with him. I shouldn't have argued with him, because once something gets into price discovery, generally these things tend to run. I'm not saying that they always tend to run, but generally these things tend to run. And now, if you look at the fundamentals to actually back this, most of the fundamentals are actually telling you that there's a lot of good news that's actually happening ahead. So the first thing that's actually happening is that the tariffs are pretty much gone. The second thing is, I think we're going to get rate cuts soon. I mean, I heard Chamat and the all-in guys actually talking this week, and I think we're actually going to get rate cuts soon. Every time I look at this, the market's giving a rate cut more and more of a chance. Today, it's still 78.8 of no rate cut in July, but then 75% chance of a rate cut in September, right? I think and the market's now pricing in 3 rate cuts again. So I think what's going to happen now is I think we're actually going to get the first rate cut in July. I think that as time goes by, what we're going to see is we're going to see more and more talk around a rate cut in July. Remember, we still got to get unemployment numbers, and we still got to get CPI numbers. But once we have the unemployment numbers and the CPI numbers, we can really put our heads on the block and decide as to whether we believe that there's going to be a rate cut in July. I think the market's pricing this wrong. I've said this. I want to put it on record. I think the first rate cut actually comes in July. You see, it was 81% before the weekend. Now, today, it was 70%. So already, it's let's just have a look at it again. Okay, now it's gone back up to 81%. So it keeps jumping up. It keeps jumping up. So regardless, I think the market's going to start pricing in the rate cuts. There's also a lot of debt that actually matures in the next 3 months. And the debt needs to be refinanced. And I think what they're going to be forced to do is refinance the debt using short-term lending rates until there's going to be some kind of rate cut. Trump was actually on the weekend, he had one of his media rants. And in the media rant on the weekend, Trump was saying that rate should be 2%, and it's now at like 4.5%. So Trump's talking about massive rate cuts that he's anticipating. I do think we have one headwind that's coming, and I think we need to just be careful of this if it actually happens, and that's the July 9th. So July 9th is the tariff deadline. Remember, the 90-day Trump put a 90-day pause on tariffs. July 9th is when that 90-day pause actually ends. So we do have to be careful just to make sure that on July 9th, Trump doesn't start doing shenanigans. As I said before, I don't think he will. And the reason why I don't think he will is because he now knows that Powell is watching every move that he says about tariffs, because that is what's going to get Powell to reduce the rates. And Powell's not going to reduce rates if that's what's going on with tariffs. So let's talk a little bit about the 134 days. So where I got this whole thing from was Well, I looked at Rect Capital. Rect Capital always posts these, what percentage of the bull market we're actually in if we land up following the 4-year cycle. And if you look at what Rect Capital is saying about the 4-year cycle, he's saying, look, if you're following the 4-year cycle, there's 92% of the cycle gone, and there's 8% left basically, and that was like 5 days ago or 6 days ago. So now we're probably 93% into the bull market, not 93, but close to 93%. So then I started to reflect and said, okay, well, 8% away from the bull market, where were we in previous bull markets? I mean, I was here in 2017, I was here in 2021, but where were we in previous bull markets when we were 92% in the progress of the cycle? And so I went back to the charts. That's the charts that we actually plotted. You can see that this one from the beginning of the cycle was 1,484 days. This from the beginning of the cycle to the end of the cycle, 1,428 days. And so this will take us, if we follow the previous 4-year cycles, we've got another 134 days left in the cycle. So the question then becomes, well, where were we in the last cycle? So in the last cycle, we had a massive run in alts already before. And yes, granted, at this part, we were at a little bit of a 𝗕𝗂𝗍 bottom when it actually comes to altcoins. But we then had a vicious run. So in those, let's just quickly go back to our chart here and see if we can find, let's go try and find that chart again. Let's go back to 2020. Okay, so this is the daily. Let's just see how many days. So we're about there. Let's just talk about July. We're about there. And it took us about 127 days to top, more or less. 134 days to actually top. So we had 134 days from being from a Bitcoin price of 32,000 to Bitcoin almost or over doubling. So giving us like 130, 140% returns. And then I focused my attention a lot more on the altcoins. And I was like, what did the altcoins do in previous cycles? And on the one hand, it looks like in 2021, we'll go back to 2017 in a second, but I think alts were more relevant in 2021. If I look at 2021, in 2021, we already had a very strong altcoin run in before this part of the cycle. Now, that's not 100% untrue for this cycle, because we actually did, as you can see here, we did have a total 2 spike. It maybe wasn't as aggressive as the last total 2 spike, but we had one very aggressive total 2 spike, which happened it ended in January. I don't know if you guys remember, but it was spurred by the meme coins and the AI agents. And so that could mean that we are kind of following the same pattern over here, where we had one spike, then we had a downward market, and maybe the downward markets didn't exactly correlate, exactly correspond. But then we're going to have the next one, which is going to take us up to a higher high, right? Specifically, this higher high wasn't a very exciting higher high. So I'll show you over here, or specifically for Bitcoin, it wasn't a very exciting higher high at all. It's here. Okay, so it only took us up like 6% more. When we go to total 2, I think it's a slightly different picture. Not very different. I'll show you. So we go to total 2 and we say, okay, so total 2, the first peak was in May. Then we dipped, and then total 2 went up 15 or 20%. Now, 15 or 20% in total 2 is quite a lot. It doesn't feel like a lot, but it actually is. It actually is quite a lot. So again, 2017 is not a very good comparison. And the reason why 2017 is not a very good comparison is because 2017, there weren't as many altcoins. The altcoin market was really like underdeveloped. I remember I was actually trading altcoins in 2017. So probably not the best comparison overall in terms of where to go. But here you can see, if you go from July, so you had a much, I think here we are in 2025. So 2017 July was here, and then the peak happened over here, which was 182 days. Okay, so not much later, 182 days, the altcoins actually topped. So what are we saying here? We're saying that in the next 150 days, call it, if you take the 134 and the 188, if you take the mean between them, or the average of them, in the next 150 days, pretty much we'll look, if the cycles are to be anything similar to what they were before, in the next 134 days, we're going to get a very aggressive market. You can see it over here. If the markets actually correspond, in 134 days, this total to in 134 days. Now remember this, you can't say it to be like for like. This went up 4,000% in 180 days, and I think pretty similar over here. Like if you go, let me just escape. Okay, so okay, there we go. So let's go here to 2021. We were actually here. So and then here we had an explosion of 180%. So we can expect a big push in the next 134 days of probably the most aggressive part of the bull market. And the fundamentals are pretty much painting the same picture. They're pretty much telling you that we could possibly get the rate cuts. If we're going to get 3 rate cuts, they're going to happen in the next 6 months. If we're going to get the tariff pauses or the trade deals are going to come out probably in the next 30, 60, 90 days. So and we've got the stock markets in price discovery. So that's pretty much where what I think is going to happen. I think we'll probably get some kind of aggressive thing, but I don't actually think that the returns in this cycle are going to be made in altcoins like they were made in the last cycle. And the reason why I don't believe it's going to happen is I think because right now a lot of the liquidity that used to come into our markets is now going into crypto stocks because they can make a lot more money in crypto stocks, right? So I'll give you, as I've said to you before, I'll show you the same examples, and I'll show you them in a slightly different context today. So this is Robinhood. And if you go to Robinhood, you can see that, let's just take the tariff dip because that's usually a nice place to start where everything kind of like bottomed out. So we say like, let's go to the bottom where everything kind of bottomed out and let's see how each stock has actually done. Robinhood did about 192%. You'll remember I was screaming till I was blue in the face at $38. I was telling you guys, buy Robinhood, buy Robinhood, buy Robinhood. I don't know how many of you actually landed up buying Robinhood. The good news is that now you can actually buy Robinhood using a Bybit account, which is absolutely amazing. Also, just if you are on Bybit and you want to trade stocks, unfortunately, I can't show it to you on a desktop. It's so because the app is not live on the desktop. But the good news is that if you are on Bybit, even EU citizens can actually do it. So Bybit is now back in Europe, and if you are in Europe, you can trade you can trade I think pretty much everything that you can trade. So Europeans, if you're anywhere in Europe and you want to actually jump on the bandwagon, buying crypto, buying stocks, and actually buying leverage with actually a licensed exchange, you've actually got Bybit here. You sign up there, you get 50% off your stock fees. You can trade the Bybit trading bots, which we'll talk about in a second. So, I mean, I think that this is a very good place to start. Why? Because if you look at the returns, look at the returns here. So let's quickly look at the returns of Coinbase. So I just want to show you where the returns are actually being made. And I know we keep saying, oh, but we trade altcoins. Guys, this is better returns than 150% than pretty much any of the altcoins have actually made, right? And now, again, you can buy it on using crypto money, using crypto rails. So, and I mean, I just want to compare that to for example, let's compare that just to Bitcoin, and we'll compare it to some altcoins in a second. So if we take Bitcoin from the bottom of the thing to where we are today, it's up 10%. No, sorry, that's the wrong bottom. I was about to say it's not only up 10%. That's impossible. But I mean, it's not. I mean, 75,000 to today. So 45%. Even ETH, which was annihilated in this thing. ETH was absolutely annihilated here. And you can see that even ETH, 77% up. So that's what one of the things that I'm actually seeing is that the returns are actually being made in the crypto-related stocks. They're not being made in the crypto-related products. A lot of the money that used to come here and push up our altcoins is now trading on places like Robinhood or trading on places like for example, Coinbase or on Charles Schwab or whatever, and they're trading the crypto-related stocks. And they're making a lot of money on things like Circle, Robinhood, Coinbase, etc., etc. And today, there was actually a good announcement, and I want to show you basically now how altcoins and stocks are actually moving or working together. So there was an announcement today it wasn't an announcement. There's speculation. You can see Arbitrum is the one altcoin that's actually moving in this, I won't say a sea of red because it's not everything's red, but a lot of the stuff's actually red. One of the tokens that's really moving is Arbitrum. And the reason why it's moving is because Robinhood is actually rumored to announce, I don't know if it'll be today or tomorrow, but they should announce a partnership with the developers of Arbitrum to actually launch an L2. So very similar to how Coinbase launched Base. Robinhood is also now going to launch an L2. Now, we don't know anything about this L2. We know that it's probably going to use the Arbitrum tech stack and probably pay licensing fees to Arbitrum, just like Base pays licensing fees to Optimism, because they use Coinbase used the Optimism stack to build Base. The same thing could happen over here. So the question then becomes, why are they doing this? Why is Robinhood actually launching a blockchain? They actually made the announcement a while back. Robinhood is developing a blockchain-based platform that will allow retail investors in Europe to trade US securities such as stocks, according to people familiar with the matter. So let's really talk about what they're doing when it comes to creating these L2s and why they don't just use an L1, because they could just go into Solana or go into ETH. So these guys are very worried about regulatory scrutiny. You'll agree with me that like people like Coinbase and Robinhood are very, very, very worried about regulatory scrutiny. They're very worried about the transactions that actually happen on their blockchains, right? And they want to make sure that the blockchains are regulatory compliant, because they're seeing the future of finance and they're saying, look, we know that you guys want to have the future of finance fully decentralized, but the reality is that the regulators are never, ever, ever going to allow us to be fully decentralized, or specifically not in the short term. And so we have to come up with this hybrid method. And so Coinbase did it by launching Base, right? And what they did with Base was they said, look, we'll use an existing tech stack. We're not going to reinvent the tech. We're going to let it settle on Ethereum. So it has all the security of Ethereum. And we're going to effectively, I don't want to say control the transactions, but yes, they do control the transactions on the thing. And the way that they control the transaction is Base charges sequencer fees for, and it's a big number in their earnings. We'll talk about how big the number is in their earnings, but Base charges sequencer fees. Coinbase charges sequencer fees for being the only sequencer on Base. Okay, so let me show you how it works. Coinbase earns sequencing revenue on Base by operating its exclusive sequencer for now. So how does that work? The sequencer is the entity that accepts the transactions on the Base L2, orders them, and then executes them off-chain. So basically, imagine that Coinbase is getting all the transactions that go on the blockchain, and then they basically order them before they actually process them on-chain, right? And that's what a sequencer is. It basically sequences the transaction. It creates order and packages the transactions. Coinbase runs the only sequencer on Base, giving it full control over which transactions to include, the order in which they're processed, and when to submit them to the rollup on Ethereum. So in other words, when can you submit them to get the security of Ethereum? And what they do is they actually charge a fee. So users pay gas fees in ETH. A portion of that goes towards the validators, and a portion of that actually goes towards sequencing the transactions. So it's a big number. Like, I actually asked ChatGPT, like, how much do you think Coinbase will make out of sequencing fees on Base? ChatGPT's estimate was 360 million. I don't know if it's that accurate, because if I look at the dashboard, they've only made $100 million in sequencing fees so far. And so, but the long story short, so why are they doing this? Because number one, they see a massive opportunity to onboard users onto Web3 in a controlled and regulated way, and to onboard them into the place where they are pretty much in control, and they can actually go to the regulators hand on heart and actually be there in control. And who makes money out of this? Well, Coinbase make money out of the sequencing. The Optimism or Arbitrum will make a license fee because they built the tech. Up until now, Optimism's earned about $20 million from sequencing, from allowing, or from giving the code base and allowing them to use the code base to develop Base. So I just want to give you an idea. So now if we're talking about Robinhood using Arbitrum, so you got Base, which is built in Optimism. Base has a total value, TVL of $3.4 billion. And then you got Arbitrum, which has $2.4 billion. So this is a massive, massive, massive move for Arbitrum, right? And I don't think it's going to go directly onto Arbitrum, but we'll hear all the details. So I just thought it's super interesting now that you've got these two titans actually fighting for blockchain dominance, to really try and understand the backstory of why these two titans are actually fighting for blockchain dominance. Who are they? What do these companies do? Should you have them in your crypto portfolio? Let's talk about all of those things. So basically, it's a battle between Coinbase and Robinhood. And here's some key statistics for you, right? So if you look at Coinbase, Coinbase is actually the bigger company. So if you look at the stats, Coinbase is the bigger company. If you look at the market cap, Coinbase is a $90 billion market cap, and Robinhood is a $75 billion market cap, more or less. If you look at some other statistics here, if you look at the net profit in 2024, Coinbase made about $2.5 billion. Robinhood made about $1 billion in profit, depending on how you look at it. If you look at the PE, in other words, how is the market pricing these? Who is the market more bullish about? Who is the market willing to pay a bigger valuation for? Actually, they're pretty equal. So they're giving a valuation of 53 to Coinbase and 53 to Robinhood. So very, 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 very close. They're saying, look, if you look at your forward earnings, we're willing to pay you a 53 multiple, which is quite a okay multiple. Let's say it's an okay multiple. This guy, or this specific analysis, is giving Coinbase a price of 75 and Robinhood a price of 273. Just so we can understand where that takes us from here. Robinhood's at 88 now, and I think Coinbase is probably at 300 and let's see where it is, 300 and. We were telling you guys, we were shouting for you guys to buy this at $40, $354, right? So this one, whoever wrote this is giving Coinbase double and giving, or just 2.5 times, and giving Robinhood about 3 times, 3x from where they are today. So again, let's just quickly look at some of the numbers here just to help make sense. So Robinhood, 73 billion market cap, 90 billion market cap for Coinbase. PEs, we've said it's adjusted is about 53. So this is where it actually starts getting interesting. If you look at the user base, so Robinhood have about 25 million users and Coinbase have about 4 times those users. So why is the market not giving the user base of Coinbase such a big valuation? Because that 105 is not the monthly active users. That 105 is the total users of all time. Now, what do we know about the users that came into Coinbase? A lot of them came in 2017 and 2021, got absolutely destroyed in crypto and probably won't come back to crypto for a long time. But they did actually land up opening an account, right? So if you look at the average monthly users, actually Robinhood has much higher monthly active users than Coinbase has, which is pretty interesting, right? And then if you look at the opportunity for Robinhood, the opportunity for Robinhood is to increase their crypto base. And I think the opposite is for Coinbase, where we're now seeing all the exchanges actually fighting to be the first to actually put stocks on chain. And that's why I think this whole Bybit opportunity is such a big opportunity, because you can put it all on chain. Average account size, more or less the same, $5,000 and $4,000. App downloads 13. No, this can't be right. Daily app downloads. Okay, that moves around on a day-to-day basis. But just interesting to understand. If you look at the Coinbase growth of revenue from 900 million in 2017 to 6.2 billion in 2024, and then these guys in 2024, okay, they're broken up into quarters, so it's very hard to actually see it. Users, as I said, they went from 1 million in 2014 to 105 million in 2024. But remember, a lot of those are never going to be used again. These guys have probably 15 or 12 million users in terms of Robinhood have about 12 or 15 million users. So why am I showing you all of these? In fact, let's quickly talk about it. How does Robinhood make money? Because Robinhood actually give you free transactions. And the reason why they make money is because they sell your order flow to market makers, and the market makers actually make margin on your order flow, and that's pretty much how they land up making the money. And remember, Coinbase has also got a very strong institutional department. Like they got a very strong wholesale team, if you want to call it that, which is they link people up to the banks. They're doing these partnerships with Shopify. They are the custodians of most of the ETFs. So now the big question is, which one of these should you have in your portfolio? Which one of these will give you the best crypto exposure? And I think my answer is very, very, very simple. You need to have both in your portfolio. And I've got both in my portfolio. I've obviously got a lot more Coinbase in my portfolio. The reason I got a lot more Coinbase is because Coinbase was my legacy purchase. I understood more about it, so I landed up buying more Coinbase for the portfolio. But the reality is that now what we're realizing is that there's this conversion between crypto and stocks. And this conversion between crypto and stocks means that if you want to get the full upside of the crypto market, you need to understand that you're not going to get the full upside of the crypto market by being in crypto. The way to get the full upside of the crypto market is to be in crypto and crypto-related stocks. You do have an edge because you know crypto better than most other users, and you know how big the market opportunity is, which most people don't know. But you need to have both of them in your portfolio. Now, look, I'm not finished building the ultimate crypto exposure portfolio, but you can see that I'm messing around with the portfolio allocations, and I've said like Bitcoin 20%, ETH if you're bullish on ETH. And the only reason why I'm putting ETH back in the portfolio is because I realized that BlackRock didn't apply for a SOL ETF. They didn't actually apply for, they're sitting out of the SOL ETF game. They're not even in the game. Actually, the company that may get the first SOL ETF approval is like, it could happen now. It's called RecShares. It's on the verge of launching the first Solana staking ETF. Yeah, so this is actually a very, very, very big thing, that this company may actually get the first Solana staking ETF, and it could happen like as soon as this week. But I realized that BlackRock's actually not playing in this, right? And so I'm playing around with putting ETH back in the portfolio, then Solana, and then 𝗕𝗬𝗕𝗂, just to make sure that you got that. But then Robinhood, Coinbase, MicroStrategy, and Circle. You got to have those in your portfolio. Now, would I put Circle into my portfolio right now? Absolutely, I wouldn't touch it right now. But there will be opportunities. The markets will pull back. We know this. There's nothing new. Even if we just look at Circle, if we look at Circle over here. So let's look at Circle. Okay, you can see it's already pulled back from 300 back to 182. It's still at a very high market cap. It's at a $40 billion market cap. Still too high for us. But definitely something that we will look at. And then at this part of the cycle, because we think it's the most aggressive part of the cycle, I would put MicroStrategy in the portfolio. Why? Because you know that you're getting leveraged Bitcoin upside. Literally leveraged Bitcoin upside. So I will fix up this portfolio because it's not 100% clean. And I'll relaunch this portfolio, and I'll try and launch this a portfolio which is not the best a crypto portfolio, but let's call it the best crypto exposure portfolio. And I think that that's quite a strong portfolio to actually have, because you don't want to be in crypto and then miss out on the crypto upside or the crypto gains because you're like, I don't trade stocks. Specifically, you don't want to do that when our crypto exchanges are actually providing you the opportunity to trade stocks. Even the Europeans, which the Europeans have been blocked off for a long time, and now the Europeans can actually have it. So I'm just reminding you, there's your link to sign up with Bybit. If you're in the EU, you can do that as well. Sign up. In fact, should we do a competition for EU people? 1 month. Let's do 1 month competition, and then we'll give away $10,000 worth of Coinbase. We'll give away $1,000 a day in Coinbase, in tokenized Coinbase stock. That'll give you your portfolio. If you use any banter link and sign up for Coinbase in the EU only. So this is only for EU people, okay? Yeah. All right, so that's the story. That's the story around this. I do think that you need to start having exposure, and I do think that a lot of your crypto gains are going to start coming from actually holding crypto stocks, not only holding crypto. Crypto is fun, but this cycle is different from all the other cycles. This cycle is completely different. And again, we need to go where the money is being made. The money is being made. Yeah, what else? You see, everyone, look at this. This was just sent to me now. Everyone's trying to get into these breaking. Wall Street is officially live on Kraken. Everyone's trying to get into it because they know that that's where the returns are. So, and now you can pretty much do it on Kraken. I mean, you can do it on Kraken, you can do it on Bybit, you can do it on a whole lot of others. Okay, just again, reminder, if you want to get into Bukele bot, we've managed to increase it. They said 500. I don't know if they're gonna. I think they're gonna cap it there. Oh, come on, man. We're not. I don't know what. I'm probably on a VPN and it's now blocked me. Oh, hallelujah. Let's quickly go to here. So if you want to go into Bukele bot, you got to sign up to Blofin with this. It's a non-KYC exchange, which means you don't have to do any KYC. Then you click on Bukele bot. The returns that this Bukele bot are going to make, I think 10, maybe 15% a month can actually happen. And then you press copy over here and you put in an amount of money and you can actually land up copying. And you can see the guys that have actually landed up copying. Okay, they're already starting to make money. So try and if you can, try and get in the first 500 spaces. I did spend a lot of time yesterday talking about how much returns this bot is actually making. The 7-day return is a bit skewed because they're taking it from, it's including this 1 day where they were messing around and it went down -6. But if you take it from here, the returns are probably in the last 7 days, like 10%, with a 73.68 hit rate. I also spoke about 2 other bots, but we'll go into those other bots in more detail on another show, which is Lambo and Mr. Chateau on Bybit. But I really think that bots is in markets that are moving sideways, as I said yesterday, when the markets are moving sideways, you tend to overtrade. And the overtrading can get you absolutely wrecked. So the best way, if you want to try and create trades where there's really not much of a market, the only way to do it is to do very small trades. But as a human, you're out of the game. As a bot, I'll just show you some of the trades that these bots are actually taking. So okay, he's in 2 trades at the moment. So you can see here, these bots are in at 107.278, then they're out at 107.729, then they're in at 106.915, they're out at 107.462, in at 106.950, out at 107.147, in at 106.423, out at, so it's in, out. Here, look at this trade over here. In at 106, out at 106.979, out at 107.130. So yeah, again, in at 107.7 and out at 107.8. In, out. That's pretty much how the bots are trading. They're trading on this thing, on these things called the grid. All right. Otherwise, Bitcoin back at 107. Yeah, let's see where we close the quarter. I'll see you guys tomorrow. Tomorrow we can review the quarter. Until then, trade well, my friends.